Ever wonder how cash flow, investments, taxes, and estate planning all fit together? Stick with us as we break down the process and the payoff of smart financial planning.
The information presented on this program is believed to be factual and up to date at the time of its recording. We do not guarantee its accuracy, and it should not be regarded as a complete analysis of the topics covered. Discussions and answers to questions do not involve the rendering of investment advice, personalized or otherwise, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Measured Wealth Private Client Group is registered with the Securities and Exchange Commission and only transacts business in states in which it is registered or exempt from registration.
Welcome to Financial Futures, a Measured Wealth podcast powered by the team at Measured Wealth in beautiful Portsmouth, New Hampshire. Each episode, we're bringing you fresh insights on retirement, investing, and everything you need to take control of your financial future. Whether you're preparing for retirement or already living it, we're here to help you make informed choices with confidence. To kick off today's conversation, here's your host, certified financial planner and chartered financial analyst, George Zaharopoulos.
Hi, everyone. Welcome back to another episode of the Financial Futures Podcast. I'm George Zaharopoulos. Today I'm speaking with Joe Neff. Joe is a certified financial planner and wealth advisor at Measured Wealth. Joe has 8 years of experience creating financial plans, and today we are focusing on the financial planning process. Joe, thank you for joining.
Hi, glad to be here, George.
Awesome. Great. So, Joe, this is a big topic. We talk about this on a daily basis, and I know we're both big advocates of financial planning. But for the audience, let's just break it down. Can you define financial planning? How would you explain it to someone kind of new to that term?
Yeah, so the way I'd explain it is to say a good financial plan is a holistic picture of your financial life, broken down into components and then directed at the goal that you're trying to achieve, right? So if we're hopefully there's more than one goal, right? Mm-hmm. If somebody's just living for retirement, that's a little strange.
Yeah.
But yeah, financial plan is going to be all of the components of your financial life, whether it's investments, insurance, how your money's flowing through your life, the taxes you pay along the way, and then the final big bomb that comes after death, right? The estate taxes. And how those assets are distributed, right? You don't want one of your nephews that said something mean to you at the Thanksgiving table getting too much of your nest egg.
Right, absolutely. I mean, the whole process in general too can involve more than just the numbers. So there's a qualitative aspect as well. We want to talk about what the next phase is for someone. That next phase might be retirement. The next phase might be raising a family, paying for a child's education. So defining kind of what's important to you and what matters to, an individual is what the financial plan is really centered around. I think it's really important that better decisions are made from that process. A lot of people who are approaching retirement might want to know what's the best way to collect Social Security, what's the right amount of risk based on my goals and objectives. How am I going to pay for healthcare expenses in retirement? We know that healthcare expenses, even premiums on Medicare and deductibles, are going to probably increase at a multiple of 2 times inflation. But basically, how can someone save on taxes, and how do we manage debt? Those are just a few of the possible outcomes from a financial plan, and there's so much more. But let's talk a little bit about the process. Start to finish. Someone approaches you, wants to do a financial plan. What can they expect?
Great question. Yeah, we're going to dive deep into the information, right? So what we're going to look for from a client, and there is a little bit of homework involved here. They're going to have to send in a number of documents, right? We're not going to know exactly how many until we have our first meeting and we dive deep into what they know is going on. And then we're going to ask for documents to support that. And then through those documents, we usually find something that's just not on the top of their mind. There's always something that's forgotten, right? Whether it's a 401k from an old company that you're not paying attention to anymore and is just kind of sitting there. Some of the worst I've seen have been just all in cash. So that's not doing anything for you. And getting those aligned with where you're going, right? Because with every financial plan, there has to be a target. We have to have a goal in mind. right? And you talked about kind of moving on to that next phase in life. And how many times have you talked to a client and you ask them what they want to do in retirement, and the big two are always golf and travel. It's like you can only do so much of both of those things before you go crazy.
Right. And for those golfers out there that aren't very good, but you get that one good shot that keeps you coming back. That's me. But important point, documents are important. So first step is gathering those documents, gathering the data. And I can't emphasize that more because, sometimes we say that we have a certain amount or a certain amount of income or a certain amount of something that, the documents will tell a different story. So that's extremely important. That's step one, really, of the process. And the CFP board actually has a 7-step process that we abide by as well. And, step 2 is going to be identifying, selecting the goals, which you talked about. Step 3 and 4, analyzing the current course of action and potential alternatives, as well as developing recommendations. Can you shed some light on what goes into that?
A lot of man hours. That's what goes into that. We ask the client to essentially document dump on us, right? So we're getting loads and loads of statements. We're getting tax returns. We're getting estate planning documents. And then it's our job to sort through those, distill those into a clear picture for our clients through our financial planning software, and then start to develop those recommendations, right? And we have to try to synthesize what you, the client, wants in retirement, or maybe it's the next house, or maybe it's, okay, you got kids on the way, and then just build a financial plan off of that in the constraints of what cash flow allows, right? So we've got to problem solve and come up with a series of alternatives. And that's a key thing there, right? We've been doing this a long time at this point. So we tend to see where it has to go, but there are many roads to get where you need to go.
Yeah, and I can attest to the time it takes to get the data right. There's so much that goes into the plan. We need to make sure that we have account for the proper amount of portfolio turnover in taxable accounts, any costs associated with the investments, any selling of property, any penalties that might be taken into consideration, state taxes, inherited IRAs are another that we want to be accurate on. There's really a lot that goes into getting the data in there and developing the scenarios. And then once we have those scenarios and we can, help with the quality recommendations, from there, it's presenting the plan, implementing the recommendations, and monitoring the progress and updating that over time.
I think it's a key thing there to remember too, that when we're monitoring and updating, right, your financial plan is not a static document. It's going to change with you. So as things happen to you in your life, right, we have those kind of guidelines of there's going to be a major life event every 7 years, whether it's a death in the family, a wedding, a baby being born, a change in career, a change in location, right? There's going to be some major life event that happens every 7 years on average, right? Some of us get lucky and it's status quo for a little while, but a financial plan needs to be a living document.
Yeah, agree. A lot of different life events coming up. For those nearing retirement, you got retirement right there, and losing a paycheck, determining how you're going to meet your expenses. You got Social Security to think about, and Medicare and RMDs, and managing withdrawals, and leaving a legacy, and any major purchases along the way, while trying to manage or minimize taxes and risk. So there's a lot involved there. But you bring up a good note. This is not a static event. How often do you recommend someone update their plan or just kind of revisit the plan?
Yeah, I think it all comes back to the fact that personal finance is at its core personal, right? So there may be some where, hey, once a year is a great check-in time, right? We want to revisit the plan, update it once a year. And outside of that, maybe we have a couple one-off questions come in, right? For others, like small business owners, for example, right? Life is a bit more hectic and things change a little bit faster. So we want to make sure that the financial plan is aligned with the reality of that person's business. So if they're hiring more employees, right? If we're helping them with their 401k plan or their simple IRA, making sure that they're in line with regulation in terms of when their employees get access or how the accounts are administered, right? Or, hey, you have somebody leave, they're taking their 401k with them. Do you want to be doing that paperwork? So, yeah, on the small business side, it makes a lot of sense to, hey, let's check in maybe every 6 months or every quarter just to make sure everything's okay. And if nothing's changed, it's a short meeting.
Right. And how about when's the best time for someone to start the engagement process in financial planning? The younger, the better? Or what do you think there?
5 years ago.
Yeah, right.
Yeah.
Agree.
Yeah, there's that cheesy saying, the best time to plant a tree is 5 years ago. The second best time is today, right? So it's my firm belief that everybody needs a financial plan. And I'm a little biased being a financial planner, but there's a peace of mind that comes with having a plan, right? You have a clear picture of what's supposed to be happening. And then you have a professional resource when what's supposed to be happening isn't happening. So you can make those adjustments on the fly.
Yeah, and I'm a firm believer that, having a financial plan for every client is a good thing, not only for them, but for also the financial advisor. Me, myself, whenever I have a meeting with a client, we're a lot of times reverting back to that plan to check on just the cash flows, check on what the tax situation is like. And taxes occur every year, so that's something that can be looked at every year. What if scenarios, what if a withdrawal was made from here? What's the impact? So I think it helps the client as much as it helps the advisor on giving the right recommendations. What can someone expect from the planning process, or what can someone expect from working with, a financial advisor on a plan?
Yeah, if we're talking about working with a good financial planner, you're going to have a professional resource that's available to you when you need them, right? So if you're working with somebody and they have your financial plan on the books, you've gone through the process, you've created it, you should be able to get in touch with them, talk to them about what's going on, and kind of brainstorm about what changes to make, right? There was something I wanted to touch on too, right? You talked about having that plan to refer back to. I mean, you've been in this industry for a long time, right? Now I'm asking the questions. Right? How many times have you come across one of those things where somebody's invested in something and it just looks wacky? And it's like, where'd you get this? And they say, oh, I answered this risk tolerance questionnaire. And then they just threw me in a portfolio, right?
Yeah.
And working with financial planner, like, you should be aligning your investments to your financial plan, right? You don't want to be taking on more risk than you need to in your investments, right? Watching the market go up and down. And there's also that peace of mind coming through where it's like, we run the Monte Carlo simulation, which is running your life through 1,000 different variances, right? Market goes up and down and up and down and up and down. And we can look at that and say, hey, like, we've built this in already. You're okay.
Yeah, great point. A lot of people have multiple accounts, multiple investments that you want to look at, not just from the individual account perspective, but also from the big household perspective. So there's a lot of factors in there that drive that investment allocation, age being one, time horizon, just comfort level with market volatility in general. And a lot of what we do comes back to a conversation, behavioral conversation as well. What not to do when the market goes down, maybe dramatically in a short amount of time, or maybe there's a trend downward. We always have to revisit that conversation about, hey, your cash flow in retirement, your cash flow needs are not going to go down. They're going to increase with inflation. So we want to make sure that you don't make any moves, sudden moves that will, needlessly negatively impact what you can build up over the long term, because, one of the big risks out there is not having an income that will gradually increase with inflation. So that's an important point that we want to make sure we drive home. And the plan is really a key factor in making sure that people stay the course.
Yeah. And I think just to add on to that, right, we're gonna keep kind of building up the financial plan here. There are other things outside of day-to-day expenses that happen in retirement, right? Maybe you want to buy that dream cottage in the mountains that you've always thought of, right? And how do you plan for that? If you're just building out a paycheck in retirement, how do you make sure you stay inside the guardrails of what's going on, right? How much you're spending versus how much you should be spending, right? And one of the cool things being an advisor is a lot of the times we get to tell the retirees we're working with that, hey, you can spend more than you are and be okay and actually be totally fine.
Yep, absolutely. Joe, for our listeners out there, before we wrap things up, I want to make sure we cover this. Measured Wealth has a planning process. We call it the Pillars of Planning. Can you tell the audience a little bit about that?
Yeah. So when we think about the pillars of planning, right, we're thinking about the pillars that are holding your financial roof over your head, right? Keeping the rain out, keeping the bad weather out, because there's going to be some tough times in anybody's life financially. So we want to make sure that your house is on good footing. So when we go through our planning process, we're looking at not just your investments. We want to make sure that you are as appropriately protected insurance-wise, right? Whether that's life insurance, disability insurance. Long-term care coverage is growing more and more complex every year. And on top of that, right, we got to make sure our recommendations, like we said, align with your cash flow. So make the joke all the time that budget's a dirty word. So we say cash flow management, making sure that, hey, like you've got money left over at the end of the day, even after you're saving and investing appropriately. And then, of course, there's the last two major pillars of the financial plan, which are, as the old adage goes, the only two certain things in life are death and taxes. So we want to make sure that we're working with our professional partners between lawyers and CPAs to make sure your estate plan is tied up and your investment accounts are in line with what your estate plan says and that it's going to where you want it to go, so that you're not gifting assets at the end of your life to somebody that maybe you don't really want to get money anymore. And then taxes along the way, right? A tax preparer falls into the just prepping documents every year for you. A good tax planner, a good CPA is going to be there when you need them a couple times a year to answer questions on how to appropriately prepare for the tax return next year, right? And we work with them in pretty close concert, right? Because there are a lot of decisions that we have to help our clients make on their financial planning side that are maybe it's going to boost their taxes for a couple of years, right?
Yeah. In a lot of situations, we're not only implementing recommendations, but we're functioning as the quarterback in the process for estate planning or tax planning. So those are all great points. When it comes to the pillars of planning in Measured Wealth, what are some options that people have to work with Measured Wealth to create a financial plan? For a lot of people, we manage their assets. What other ways can someone work with Measured Wealth?
Great question. Great lead in, right? Because we're just about to, depending on when this episode comes out, we're in our ramp up phase for starting a flat fee financial planning platform, right? Where we can bring clients on who maybe just need a one-time thing, or maybe they're looking for an ongoing partnership, but maybe they don't have the assets that would usually take for us to be engaged in an in-depth financial plan with them, right? Because, I mean, at the end of the day, we are a business, right? We got to keep the lights on here. So if you're one of those people where, hey, maybe a lot of your assets are tied up in a workplace retirement plan, or maybe you just haven't had the opportunity to save up a lot yet, or maybe you've got pensions, right? And you just want to know what the right way to take those and then how you're going to claim Social Security after, then yeah, this could be a great opportunity to get in front of a financial planner who's going to care about you and work through this together.
Yeah, I was looking at the pillars of planning, what's included in, for those business owners, business succession is included. There's tax loss harvesting, there's portfolio construction. There's just a lot involved in a holistic financial plan that some people may not need everything. Not everyone needs everything, especially in one point in time. But over time, they might, see different years require different. They have different needs.
Yeah, personal finance is personal, right?
That's right.
You're just going to keep saying that over and over again. Yeah, it's a great point, right? And that's part of like the question of when should you seek out a professional, right? And if you have the know-how, right, if you have the general idea on what you should be doing, and maybe you're hitting a ton of savings goals, maybe you're maxing out those retirement accounts, life's not too complex yet, right? You're just starting to build. It might still be worth it just to have somebody take a peek, just to make sure you're on the right track. And then maybe you're mid-career, right? Maybe you moved jobs a couple times, right? Because now everybody hops jobs every couple of years, which is a little intense.
Well, there's a new term out there called job hugging. People are staying at the same job now.
It goes with the markets, right?
That's right.
Yeah. All those scary unemployment numbers that pop up in the headlines.
Right.
But yeah, switching between jobs, you got a bit of an asset pool piled up, right? You're starting to get a little overwhelmed with the amount of time it takes to get everything in order. And then after that, making decisions seems like paralyzing. You get paralysis by analysis and you don't want to make that next decision. Then it really makes sense to talk to somebody who knows what they're doing.
Great point, too, because, I know there's some listeners out there that might want to try to tackle this on their own. But even with our experience, we know that there's a challenge with this whole process. So I can't imagine, someone wanting to figure out tax planning, investment planning, estate planning, protection planning, and cash flow planning, all on their own. But of course, they certainly could try, but there's definitely a lot of challenges around that.
Yeah, for sure. It gets intense pretty quick. And then add kids into the mix and college planning, and then maybe you don't want to pay for their college, but you're trying to help them out with their student loans after the fact. It goes deep and it goes far, right? And honestly, the regular person only gets to do the retirement thing once, right? We walk through it with people every day, right? So on a regular basis, we're seeing all these different scenarios in retirement. So we kind of have that, I don't want to say disassociated, but like third party, like observer.
Right. And third party observer too, on that note, if there's someone out there listening that, has done their own financial planning and would like a second pair of eyes on their plan, by all means, we'd be more than willing to help. But on that note, Joe, before we wrap things up, can you tell the audience anything unique about yourself? Anything interesting? What would you like to share?
The king of weird hobbies, right? But no, I think the biggest thing for me in terms of stuff I do, like outside of being a dad and having that eat up almost all of my time, I'm a financial planner by day, and at night, just to burn off all the steam of having to live dealing with the markets and things like that and read the headlines so you don't have to, I teach Brazilian Jiu-Jitsu. I'm a Brazilian Jiu-Jitsu black belt with Team Henzo Gracie, New Hampshire, and I go and teach people how to fold each other in half for fun. And it's a great way to blow off some steam.
That's awesome. Yeah, Joe, congratulations on your newborn. And for those of you out there listening, if you come in, you might get a financial plan and you might get a lesson in Brazilian Jiu-Jitsu. So you never know. You could gain some skills in many areas. Financial planning isn't just a one-and-done task. It's really the foundation of your future. The sooner you start, the sooner you can gain clarity and control over your decisions. Don't wait. Take the first step today. Reach out and let's build a plan that moves you forward. Joe, thank you again for joining me today. And thanks everyone for tuning in to Financial Futures, a Measured Wealth podcast. If you enjoyed today's episode, be sure to follow or subscribe on your favorite podcast app so you never miss an update. Want to learn more or get in touch? Head over to measuredwealth.net, where you'll find prior episodes, helpful financial planning guides, and more. You can also call us at 603-431-1444 or email at info@measuredwealth.net. That's info@measuredwealth.net. Thanks again for listening, and remember, the future will someday be the present.